Anyway, I'm Jimmy L. You can just call me Jimmy. I've been a crypto trader since 2017, really. Entered the crypto space in 2016, and I'm interested in crypto ever since. Everything I do has something to do with crypto. Today I went on a run and I was using Stepan. I ran 25K and I earned about 600 US dollars through that. So my life is kind of in the crypto space, in the cryptoverse. And so today we're going to talk a bit about how to survive the cryptoverse, because I know that a lot of you, maybe most of you, have entered the space in the past 1 or 2 years. Most people I know in my group have entered the space somewhere between 2021 and 2022, when the markets have been going up all the time. But, you know, things are good when things are good, but when things go bad, people tend to leave. They lose hope. And the true survivors are able to reap the gains in the next cycle. So we're here to talk about market cycles, really. So today I have a chart for you. Unfortunately, I'm not able to bring up a Huobi chart because we don't have history that far back. So I'm using a Bitstamp chart instead, using TradingView, which is my tool of choice. And here we can see that Bitcoin since 2011 has been going up all the time. So we're in a perpetual bull market as of now. Although we've had a few corrections, few downturns, like in 2013, we went from 1,000 to 100. This one I remember very clearly. So 2017 peak was at 20,000, and we dropped all the way down to 3,100. So you can see in the cryptoverse, we see pretty big drawdowns. But you need to realize that since the start of time, the start of crypto time, which is around in 2009, even this chart doesn't have history that long back, it has been going up only. I think there is a podcast called Up Only, and it's quite good. Yeah, and we have been going up only. But the thing is, during this long cycle of up only, we've had drawdowns so big that makes us wonder, are we still going to make it? Are we going to not going to make it, or are we going to make it? But it's safe to say crypto is here to stay. I mean, if you were in the space in 2013, 2014, it may have not been the case, because crypto back then, we're analyzing market cycles right now. So crypto back then in 2013 was priced in drugs, to be honest, because it was used mainly as a means to purchase illicit drugs on Silk Road, on the dark web, or even arms. So back then, crypto was a completely different thing. And then as more people got into this thing, obviously that being a use case, buying drugs on the dark web as a use case, that has pushed crypto to a larger audience. I mean, it is a bad thing. Taking drugs is a bad thing. Definitely don't take drugs. And this is not financial advice. This is what we always have to say, right? But it definitely broadened the audience of cryptocurrencies a lot. And I would say in 2015, 2016, things got a lot different. Ethereum was invented. So before, in 2011, 2012, 2013, 2014, it was just Bitcoin. So cryptocurrencies was just Bitcoin. In 2013, I think we had Litecoin, but I wasn't in the space back then. So I can't really speak for those people who traded back then. It must have been really, really hard. And then after that, we've seen a big uptrend since 2015. So September 2015, we started the big bull market. Huobi was open back then, but due to the trading halting in China since September 2017, the charts have been disrupted. But anyway, so we started that big bull market back in 2015 and went all the way to 20K. And that was mainly due to the rise of Ethereum. So Ethereum, as a new kind of cryptocurrency, made it possible for people to put decentralized apps. They could build things on top of blockchain. And this really gave birth to Web 3.0. Because, to be honest, Web 3.0 as a term, I think, was invented sometime last year. But when did Web 3.0 start? I think it started when Ethereum came to the table. So Ethereum coming into the equation gave rise to this massive bull market. But as we approached the end of 2017, I bet some of you listening here have experienced that before. The 2017 bull market being ICOs, so initial coin offerings, being the main trend. I remember the biggest ICO that really pushed the price of Ethereum up was ANT, Aragon. And it's still a coin now, ANT. It's a platform to build decentralized autonomous organizations, DAOs. So that they got 50 million in funding, and that project alone pushed the price of Ethereum up by quite a lot. And after that, people realized, wow, this kind of crowdfunding a new coin, which can be its own thing, and we can get Ethereum from it, became a huge hit. And later on in 2017, lots of scam projects came to the table. So that really resulted in this blow off top. So in technical analysis, we call this parabolic trend up that goes way too fast and then starts dropping. We call this a blow off top. So after this blow off top, it resulted in the 2-year bear market of 2018 to 2020. And then COVID started. So COVID resulted in a big drop. And now we've gone up a lot. So we've gone up from 3,800 to 69K, 69.420. So this bull market from 3,800 to 69K is almost 20x. So it's a big rise. And are we in a bear market now? I think this is the first question we're getting. Are we in a bear market? I think personally, I think we are. Obviously, this is not financial advice. I've traded tops, I've traded bottoms before, and I've experienced a full market cycle in cryptocurrencies. So I started round about here. So we'll go back to the Ethereum chart because I didn't actually purchase Bitcoin. Oh, we may need to go back. Anyway, this chart doesn't have that much history, but I purchased my first Ethereum around €5. And then I went all in. I went all in at around $12. So it feels like a really long time ago, but it's only how many years ago? 5 years ago, which isn't that long really in investment terms, because investment is a marathon. Let me take a sip of my beer. Investment is a marathon for sure. Trading is sprinting, but if you want to invest in something, you must stay in for the long term. So I entered the market around here and pretty much didn't do much. But once I sold my Ethereum at just before I went to sleep, I forgot at which price it was, but I sold my Ethereum, and the next day I woke up to a doubled Ethereum, and I was like, OMG! I bought back all my coins, and I had 50% less Ethereum. So essentially, I think I sold at around $250, and I rebought back at like $450 the next day, and I was so pissed because I had a few hundred Ethereum, sold it, and then bought back like something like $250, and it was a terrible feeling. So at that moment, I realized the importance of HODL. So HODL. Some people believe this is this means hold on for dear life, but it actually doesn't. It is somebody misspelled hold, so it's a misspelled word, but it basically means just hold on for dear life. That's basically what it means. I hodled it all the way to, we can use this chart now, all the way to around 1200, 1400. That's my Ethereum journey. So a quick intro to my trading career. So I entered a quick recap, basically. I entered the space in 2016, went all in Ethereum, $12. And then later in 2017, I think some of you may remember a coin called ANS, and that was that later became NEO, NEO, like Neo the One. So that coin went from around $1 to $180. So I got a bunch of Ethereum, and then I cycled in some profits into NEO, which was ANS back then, at around $2. And I sold most of my NEO at around $90, and quite a bit of it at $180. So I've been through these big coins who have gone up a lot. And in 2018, I was a bit complacent. Let's see, let's have a look at this chart. So in 2018, let's go back to 2018. We saw this massive drop. And then the markets rebounded. I mean, Bitcoin didn't rebound much, but if you've been in the market here, you would know that some coins like Ontology, which is another project started by the Neo Foundation, they launched their airdrop. So that was the biggest airdrop ever. If you subscribe to their newsletter, I think in 2017, in 2018, they would have given you 2,000 ONT, which was worth $10,000 back then. So it was a huge airdrop. Obviously, it's nothing compared to like Ape. I don't own a BAYC, but I think the BAYC airdrop was worth around 100K. But obviously, owning an ape costs a lot of money. So that's kind of different. But this was the first big airdrop. And I think many projects with retroactive airdrops later, like what do we have? Uni, right? If you used Uni, you would have been given 400 Uni. That idea came from 2018 with ontology. I think we can get a chart actually. So ONT USDT, let's pull up the Huobi chart. Back then, so 2018, May in 2018, it went online around like $1 something, and it went all the way to $10 before dropping really hard. So I bought in, I got a bit of that airdrop, and I bought in at around $2, and I rode it up all the way to $10. So that really, I think it wasn't a good thing. It wasn't a good thing because it made me it didn't make me realize how should I phrase this? It made me think. It eluded me to thinking that we were still in a bull market, but in fact, the bear market had just started back then. But it was ontology. Ontology went up 10x in a bear market, which is possible. A bear market doesn't mean like all the prices are going down constantly. You'll still get 10x, 20x coins. It's just you may not get 100x coins. You can still get very bullish coins. Don't be mistaken. But you must keep a clear head and look at the charts of Bitcoin and Ethereum, because these two really decide where we're going in the long term. So we're talking psychology here. Lots of coins went up a lot here. So in February, March, April, I remember that time, many coins went up to all-time highs. Altcoins went up to all-time highs. But Bitcoin has been on the decline, and we've seen this floor being formed. So in technical analysis, we call this a price floor, where there is a lot of support, and it seems as though the price can never break down below this number. That was the 6,000 price floor. And I remember this pump here happened when there was some Tether FUD. So Tether being the stable coin, USDT, there was some fear and uncertainty and doubt surrounding Tether, saying it wasn't backed by US dollars or something, which caused people in Tether to buy Bitcoin. Because if there's a problem with your stable coin, what do? You sell your stable coin. What do you sell it for? There weren't other stable coins. Not like now, some exchanges do have other coins like Australian dollars or some other fiat currency. But back then there wasn't. So people just went all in Bitcoin, which caused Bitcoin to go up from 6,000 to like 7,500 in a day. And it did that, and it started its massive dump to 3,000, and that was terrible. And we dropped to 3,000, 4,000, and we went sideways for a long time. And that's even it's so unbearable, because you see the price drop, you expect, since it's dropped this far, don't we get a rebound? But you just don't get a rebound. It just keeps on going sideways. And people lose hope as things go flat. So lots of people shorted 4,000, and it went up to like 5,000 in less than a week. And it started its pump, and people thought wow, the bull market is back. Let's effing go, right? No profanity on this channel, I'm afraid. And we hit a peak of 13,000 and another long decline. And this long decline was really choppy. So this kind of price action here has been real and still is really difficult to trade, because once you realize this is a channel, this is a technical channel, two trend lines. These are trend lines. So if you want to learn charting, it's very easy. You can just go to tradingview.com, use the tools on screen here. See, we use trend lines. We can draw this parallel channel, downwards channel, and once you see this channel form, it's basically the end of the channel. So that's the tricky part with technical analysis. You see people drawing channels, right? That channel only exists because the price history has done that, but it doesn't mean it will continue to do that. That's the problem with technical analysis. So once people realized this was a channel, here we bottomed out. We bottomed out, and we went up. We went up all the way to 10,000, from 6,000 to 10,000. And this pump made a lot of people bullish again, because this means we've gone up, we've formed a channel, and then we're going up again. But we stopped at 10,000, and then things started getting a bit wonky, and then we dumped all the way down to 3,800. So that was COVID, so COVID was brewing back then. Was brewing in 2019 actually, but only in March 2020 it really affected the global markets, and it dumped oil all the way to like negative 140, I think, and many other things dumped really, really hard. Because you need to realize that even if Bitcoin is anti-fiat, anti-centralization, right? It is still a traded commodity. So people trading these commodities often trade other things. And if their other positions, like if their gold positions, if their stock positions, if their oil positions are getting liquidated, they're going to sell their Bitcoin to fill their reserves. So that's what caused the dump in BTC. Nobody willingly wanted to sell BTC at the bottom. It's just they needed liquidity, or the exchanges needed liquidity because we've liquidated them. Anyway, after that big dump, we saw a massive rise. Stimulus checks in the US, everyone getting $1,400. I mean, lots of the whole population getting that. Some of them investing in Bitcoin. Obviously, inflation made BTC very desirable. Also for funds, gave rise to funds like actually MicroStrategy with Michael Saylor buying tons of BTC, not literal tons because BTC is virtual, but you know what I'm saying. Tons of BTC, Grayscale, funds like Grayscale, companies like MicroStrategy, and now we have Luna Foundation buying a ton of BTC. So these big players really pushed the price up, and global demand too. Global demand rose. People weren't traveling. They had a ton of money, especially in the US, to invest in things that were that would counter inflation. So apparently during this time, BTC rose, Ethereum rose, Things like watches, if Rolexes, Patek Philippe's, those luxury watches rose, housing prices rose, anything that's anti-inflation, that's anything that's scarce went up in value. So BTC, having digital scarcity, went up in value by a long shot. So we're just talking about history here. Welcome if you've just joined the channel. We're live at Huobi Live here. And then we hit a top of 63,000. So after that top, I don't know if you remember, but we started getting some news out of China. So China banning mining, which was a huge deal. I mean, China banned ICOs and exchanges all the way back in 2017, and exchanges moved overseas. Here we see China banning mining, so that's actually, in my opinion, a bigger deal, because in the past, 70% of Bitcoin's hash rate, mining power was in China. So all of that mining power gone overnight really was devastating for the Bitcoin network, and devastating for many small miners, because big miners, they don't really care. They can just move their machines. They could sell their machines. If it's Ethereum, they could sell their mining rigs to any CG company. They would need them. But with ASIC miners, you can only mine BTC, so you can't really mine it. You can't really do anything else with it. So a lot of miners went out of business, which is quite sad to see. But we've seen BTC's hash rate recover rapidly, and all of this mining power going overseas. I think that is what caused this rise. So imagine if China didn't ban mining. If China didn't ban mining, I think the price would have done this. So we would have gone from 30,000 all the way to 69,000, and then just dropped. But China banning mining in the short term caused Bitcoin's price to halve. So it went to from 62,000 all the way down to 30,000, which is crazy, because in the past, in 2017, we never saw a decline below 42%. So here, it dropping 50% was a big deal. Lots of people got shaken out. I didn't get shaken out, but I didn't sell the top either, unfortunately. So we bought more at 30,000 and rode it all the way back to 69K. Didn't sell 69K, but we sold. Let's see where we need to draw that trend line again. Let's see. If we draw this trend line, you can clearly see we've dropped through this trend line. And on that day, once it bounced back to around, I was actually looking at the linear chart. So I sold at 53,000, and I'm still out now, but I bought back at 30,000, sold here, bought back, and then I sold at 48,000. So maybe some of you, I mean, in the introduction to the live stream, I think there was a bit about Jimmy sold 48K, predicted 48K. How did he do that? Well, some simple magic. Anyway, so we're in we are in a technical bear market right now. So technically, we are in a bear market because we've broken the 2020 trend line. So since the start of the bull market, we formed this trend line, which indicates an upwards trend, and we've broken that trend line, which means that the trend has changed. So technically, we are in a bear market. So now we are in a downtrend, no matter if you like it or not, we are in a downtrend. So when we're trading this, make sure, I make sure I don't fall for things that trap bulls. So these are called bull traps. Let's go down to the lower time frame and talk about the recent price action, recent moves. So we kind of got out here, and we can analyze people's psychology. Once the price broke this level, a lot of people called for a higher low. So people believe that this drop, after this drop, there was a big rise to an all-time high, and then we had another drop, and now we're going to go up from here to form this upwards triangle, or whatever you want to call it, bullish wedge, bearish wedge actually, but lots of bearish wedges in bull markets go bullish. But anyway, we dropped through this trend line, but lots of people were complacent here, believing that the bull market was going to continue. But then it just dropped further and then further. And now we've gone sideways. So this has been an emotional roller coaster, because we dipped to this level, which was very hard because most people bought here. So once we dipped here, a lot of people got scared out. And after the dip, we consolidated below the previous level. So consolidating below the previous level really psychologically is hard for the trader, because they believe that we're going to consolidate and we're going to drop further. But then we pumped up. We dropped down due to the Russian-Ukraine war. And at this point, just when the war broke out, I checked a few charts of previous wars. So usually once a war breaks out, the first day when they start fighting, markets usually take a short-term downturn. But once it regains that dip it has created, it usually results in a bullish upturn. So that was right. We bought in at 35,000. We bought in at 35,000, and I think Ethereum at around 2,400. And then prices went up. We were happy. We believed that this could be a top. Sold Ethereum at 3,300. Bought back BTC and Ethereum at around 37,000, and Ethereum at what was it? Let's have a look. So what time frame is this? Oh, we bought back Ethereum at around 2,700, a bit high, but later it did go up, so that was okay. A lot of people didn't believe this would go up, but if you look at my, are we still here? This is my Twitter. I don't know why I keep logging out, but you can see here I posted a chart of us going all the way up to 48K and then dropping hard. So this is what I predicted. This is going exactly as I predicted, actually, which is kind of scary. I predicted that the market would go up to 48K and then drop down. Why? Simply because at that level, a lot of people would turn bullish. And that's exactly the purpose of every bear market bounce. So a bear market is when prices go down in the long term. In the midterm and in the long term, if you buy in any coin, well, not any coin, if you buy in one of the major coins and hold on to it for more than 3 months, more than a quarter, you're going to lose a bit of money. So that's a technical bear market, and we've done that. We've pretty much done that. But even in bear markets, we see corrections. So corrections are moves, counter trend moves. So the trend here is down. A counter trend move would be up. Corrections are counter trend moves. So we've seen this pump, a few pumps actually, that made a lot of people bullish, especially this pump above 45K. So I bet a lot of people were looking at this level. Let's get rid of all of these drawings. When you're a trader, you look for, whether if you're a trader or a technical analyst, you look for patterns, right? So here we see this pattern, right? There's definitely some kind of resistance here. If we extend this trend line, you can see why, right? All the way back here, which was December 2021, we found support here, buy support, and then we dropped through it, and we have bounced below it ever since until March 28th. March 28th, we broke through this level, retested it, and a lot of people went bullish here. So when you're looking at charts, the important thing is not to identify the resistance as a place to short the market or anything. It is, you need to identify where most people will get trapped. So right at this moment, the markets have gone down, and we've had a bit of bullish activity here, although it's all purely corrected. It's not bullish. We've seen the price break through this important level everyone's looking at. So tons of people went bullish here. And then after the retest, they're even more bullish because, like people learn trading online. They think, oh, if you break through an important level and you retest it and it doesn't break down, then that's good, right? But then we went sideways for like, God knows how long, a week. We went sideways for a week above this level, and that's deadly because people tend to buy in once consolidation starts. Because when things go up and down really quickly, people don't want to enter the markets. But once the price stabilizes at a very high point, people think, "Wow, this is safe. This is safe to buy. Let's buy this," and we're going to go to 50K. And even CZ of Binance, he tweeted, "Slap yourself if you sold Bitcoin below 50K." But yeah, I did sell Bitcoin below 50K at 48K. And I sold at 43K. And that is I've done quite well for myself, to be honest. But yeah, guys, you need to realize that when trading, it is not that important to find just random resistance lines, trend lines, channels, but it's way more important to find something like a point where lots of people will turn bullish. If it's a downtrend, you search for where people go bullish to short the market. And if it's an uptrend, you search for where people are likely to be shaken out. So if we see an upwards channel and it breaks out of the channel a bit, then it is very possible that we're gonna consolidate below the channel to make people think, oh my God, the price is going to drop further. Let's sell, sell, sell. And once they sell, the rocket boosters can be reignited, and we're going all the way to the moon. So that's basically my main trading strategy. It is not about just looking at all the trend lines everyone's looking at, but it is about identifying those trend lines. You should go on Twitter, follow all of these technical analysts, and even draw the charts yourself and identify where people are going to be bullish at the wrong time. So right now, we're in a bear market. Prices have dropped, but we've seen some bullish price action here, and we've poked through. So a lot of people would go bullish here. So this is exactly where the top is. And that's how I predicted this. And obviously, there are other ways of predicting that exact level. But I wouldn't go too far into the details, but I basically used a tool in TradingView called, what is it called? Trend-based Fibonacci extension. So it's about ratios. This first leg up is equal to this leg from 34,000 all the way up to 48,000. So this is the projected target, the one, the place where this leg equals this leg. So that's what we call an ABC correction. So there is that tool for marking it. So this is leg A, this is leg B, and leg C is here. So B to C is the same distance as 0 to A. So this is a very classic, it's a classical correction pattern. So, I mean, these Elliott waves, this is called Elliott wave analysis, ABC corrections. And there are 5 waves, there are 3 waves. They're all different corrections. There are 3, 3, 5 waves. There are so many different waves, but I believe that this kind of analysis works best in bear markets. In bull markets, it doesn't work that well, because if you try to count the waves for a bull market uptrend, you'll just get out way too early. You'll probably be out by 10,000 or 20,000 or 30,000. You won't ride the wave all the way up, ride the waves all the way up. So it is a bit deadly if you do that. It's kind of a mindset trap. So I wouldn't trust Elliott wave theory too much, but I realized that when the markets are consolidating, so let's talk about like bull market versus bear market. What's the difference? Well, bull market is when tons of money, many people are entering the market, which causes prices to go up because there's a ton of demand. There's a ton of fresh money coming into the markets. But a bear market is when a lot of money leaves the market, and the money that's trading the market is the money that is going to stay in the market for the time being, forever, really, because they just trade the markets for a living. Traders, it's a trader's market. So a bear market is a trader's market where traders make money. A bull market is where investors make money. So that's the main difference. So now in a bear market, as a trader's market, some of these geeky trade tools like Elliott wave, like Fibonacci's, like trend lines, like harmonic patterns, these things work really well in a bear market. Why? Because there are more traders in a bear market. But in a bull market, if you see there's not really much to do in a bull market, you just buy and you hold and you make money. So right now, I think it is a lot better to do a bit of trading. But when you do trading as a novice, definitely stay away from futures, because if you trade futures, you can up the leverage so high that you can't control your risk. So that's a bit dangerous, to be honest, because if you don't know risk management, if you don't know how much, if you put in too much, more than you're willing to lose, you'll probably lose it all, because the markets are very psychological. It's basically psychological warfare, and it's the hardest game on the planet, to be honest. So let's talk a bit about recent price action. Are we going to drop further? I'm sure people listening to the stream now are asking the same question. My answer would be yes, we're going to dump a lot further, but it's not the end of the world. We will see Bitcoin above 50K probably sometime this year. So as of now, let's construct the chart of my dreams. So I like predicting markets, although a lot of my predictions don't go as expected, but usually these midterm predictions I'm quite good at. So let's have a look. From here, I can identify a trend line down here. So that's where we could drop to. But actually, we need to have a look at long-term trend lines too. Not just that. We need to have a look at trend lines formed all the way back in the dinosaur ages, before Web 3.0. So we need to find a trend line that will kind of line up in this area. So I can clearly see there's a line here. Let's see. So the first point of reference would be this 2019 dip. And then we have a where price action seemingly touches resistance at 7.5K. And then the price really consolidates above this trend line. And we can see every time it dips back to this trend line, there is buy support, and it goes all the way up. So this is a historical trend line that we should take note of. Let me take a sip of my beer. How are we doing for time? 48 minutes. Okay. Another trend line would be this. Level. Would be this historical trend line here, which is 2020 February. That's the first point of reference. Second point of reference, August 2020. And then that kind of, all of these two lines line up in this area. So this is my usual way of predicting bottoms. We need to look into history. I'm actually a history major, studied history, biology, and uni, and then went into trading after buying a bunch of Ethereum at a very, very nice price. And then fell in love with it because my money doubled in a week. And that was really what made me really interested in crypto. First, it was the money. Later, it was the technology. And now it's purely how people react to my charts. Because I noticed that which one of my predictions would trigger the most people is the one that usually comes true. So I predicted that we would go to 48K and then drop to like 26K. And that chart really got a lot of people annoyed, got the bulls annoyed. And that's kind of the reaction that I'm looking for here, because we wanna, this is what markets are all about. Markets are about uh, legal theft. It's basically legal theft. If you put your money in the markets and you're on the wrong side of history, your money will be gone. So that's exactly how trading works. So this leg down, I believe we will be dropping below 30K. That's the bad news. The good news is, I think this year we'll see Bitcoin consolidate between 23K and 28K and take an upturn. So I'm going to draw a prediction. What I think BTC will do. In the short term, will it bounce from here? To be honest, I don't know, but I think we'll drop to 37K. Let's go down to a shorter time frame. So in the short time frame, we see a potential support level here, but it could be also altered. And so this support level is kind of in the middle of the chart. It's not a polar trend line. But here we can see a support level, and it extends all the way out here. And that price is around 38K. So it is possible for us to drop to 38K or a bit below 38K and then do a little bounce. But in the midterm, if we assume this is a downtrend, and what I just drew here is a correction, we're going to see Bitcoin's price plummet further. So where will it go? In this box, this is what I think. There are a few reasons for this. First of all, I think a lot of people are trapped here, and I don't think it would be in the interest of the bears to push the price back up, because if we bounce here, people will want to get out, right? You don't want to give people a chance to get out. So if people went long here, well, tough luck, you're going to get liquidated. That's exactly how things are going to be, right? It has dropped if people haven't been liquidated yet. If I was the market maker, if I decided where the markets would go, I wouldn't give a very big bounce here, to be honest, because let's see how much we've dropped. Because most people, I think most people in crypto markets use around 10x leverage. So how big of a drop? Oh, okay, this is already 50%. I bet a lot of people got liquidated here. Sorry, guys. And no offense if you got liquidated, but it is your money that you're risking. So please be responsible. Please be a responsible trader. Money is money. Money is hard-earned cash. It's not gambling, okay? So right at this moment, this price action is extremely bearish. So we've seen, oh, what have I done? Okay, we're back. This price action isn't that great. We've seen it take a big dump, and we've gone sideways. And this is another correction wave. So another ABC. And we're going to see the price go further down. And if it goes further down, it is possible that we'll see the formation of a so-called bullish wedge. So this kind of pattern usually results in a bounce. So it is possible that we'll drop to 38K, 37K, bounce a bit, maybe back to 40K, get people bullish again, get the bulls to buy in, add into their longs, and then we're probably going to dump further. So stay safe out there. So how am I coming to these conclusions? This is basic psychology, and how people react to price, right? Price is what someone is willing to pay for something at a certain time. So the price has gone up to 48K, which has driven in a lot of demand. There's a huge amount of demand at 48K because people have seen it pump through this price level and people think it's going to go to 50K, but in fact it hasn't. And it's taken a downturn. And now people with 5x leverage are about to get liquidated on this move. Let's see how far it will take for them to get liquidated if prices drop further. So I think if someone longed at 46K, which is probably the average long position in the past couple of weeks, if they still held on to their position now, their position would be liquidated at 20% because 5x times 20% is 100%. You lose all your money, right? So that's a price to look out for. This is a price where 5x leverage traders will be liquidated if they long the top. So this is a potential point for a bounce. So if I'm not going to give any trading or financial advice here, but if I was trapped in a position where I bought Bitcoin a bit high, I'm not leverage longing. I bought Bitcoin a bit high, and I wanted to get out at some point, I would definitely wait for a bounce around 37, 38K and see where that bounce takes us. Maybe it will take us just above 40K to get people back bullish again. And then sell, and then it should drop further. So we're using a few tools here. You need to analyze. You need to find a point where a lot of people will take a certain stance in the market. So they'll lean bullish here. They'll take a leverage long position, either 10x, 5x. We're not going to talk about 50x or 100x people. They have been gone like in the first dump. So they have nothing to worry about. They've already lost their funds. But for 5x traders, if they longed here, I reckon most of the volume comes from 5x leverage traders. So if someone entered a 5x position here, they would get liquidated 37K, and that would result in a lot of liquidity there. So it is very possible that a whale is thinking the same as me, thinking if I push the price down to that level, it's going to cause a cascade of liquidations, which I can catch. I can use that liquidity. I can buy a bunch of Bitcoin and watch the price rise like 5%, 10%, and then I'll sell again. So that's exactly how big players in this market work. Traders, but not investors. Investors buy whatever price. So I think we'll see a dip further. If you've just entered the stream, we're analyzing markets right here. So a dip further to 37K, and then a bounce to maybe 40K. And then we're going to dip a lot further, unfortunately. So if we use Elliott waves that I've comfortably discredited just now, this may be a 4 wave, and then we'll see a 5 wave, which is an extended wave, all the way down to, it's possible that we'll go down to 23K. And once we drop to, this is all a prediction, by the way. It's not exact. I don't think we'll do exactly this, but something like this. I think the price range is definitely something to consider. Why? Because if we extend this price range all the way over here, you'll realize that it is right below the 2021. It's right below the 2021 lows. So that's very important because a lot of people will be taking reference. They'll be looking at this price action here, and they'll identify this as a support. They'll identify 29K as a support. So if we drop below 29K, a lot of people will be very depressed because it has dropped below a previous low, which a lot of traders look out for. And if it does that, well, the markets are bad. But that's what retail traders do. Retail traders tend to do things after things have happened. So like if we've broken a big important level, I'm going to sell because the price may plummet a lot further. So I'm kind of negating the risk. But actually, it is riskiest in a bear market when prices are high. When things are good, that's when things are dangerous. It is not when you've already hit the bottom that things are dangerous. So it's a little bit counterintuitive. So to be honest, it was a lot riskier when things were at 45K than when price is at 39K. We've dropped a fair bit here, but all the risk was up here. It is not here. So you need to clear your head. You need to clear your head. In a bull market, do not turn bearish so easily. But in a bear market, do not turn bullish so easily, because most retail traders tend to make their money by buying a coin and then selling it for a higher price, or not selling at all. So people are used to buying and selling, but people aren't used to shorting and then rebuying. So this is definitely a trade less taken. That's why when things dump in a bear market, they usually dump very quickly, without hesitation. They don't do all of this bouncing around stuff. Usually price goes down quite easily because lots of long liquidations, and also not many people short the market, because especially at the start of a bear market, most people tend to be NFT traders or spot market traders. Not many people are futures traders because it's not useful, right? It is more useful to be a futures trader in a trader's market when prices are going like this and you can sell low and buy high. Oh wait, that's the that's a wrong way to do it. Sorry guys, you need to buy low and sell high, not sell low and buy high. Definitely don't do that. Okay. Yeah, do what others won't do. So this is, I think some other Twitter commentators have coined this term, a PvP market. It is not my invention. I think Trader XO or someone like Kobe or Donald have coined this term. So it is basically where traders are trading against each other rather than just buying and holding. And also in a trader's market, in a PvP market, in a bear market, whatever you want to call it, it is common for people to be very bullish when prices are high and very bearish when prices are low. I bet a lot of you have sensed this. So once we dropped from, what was it, 45K all the way to 35K, a lot of people went bearish at the bottom because, the war, we don't want to talk about that. Terrible things happening. But a lot of people, the majority, went bearish at 35K, 36K. But now they're back bullish at 46K. So what's up with that? Well, that's a PvP market. The majority is wrong. The majority in a PvP market is wrong. You need to be the minority. So, but it's also quite difficult because you cannot get a great enough sample size, right, to be totally on top of things. You need to follow a variety of people. You can't just follow people who you like or people who have big breasts, right? You have to follow good traders, bad traders, noobs, professionals. You have to follow all sorts of different people to give you a big picture of what people are thinking, right? I've seen people on Twitter following me for a couple of weeks, and I post this uber bearish chart of BTC potentially plummeting to 25K, and they block me because they don't want to see what I post. So if they block me, they're not getting a full picture of what everyone's thinking. But I don't block anyone. I only block. Oh, actually, I do block people. I do block people who just post loads of random NFT BS. If they shill projects, I don't shill projects. I just trade. I trade and I analyze. I don't buy shitcoins. So I block those kinds of people, but I generally follow a large audience. So that's why if you see my Twitter, I have 4,900 followers, but I follow 2,100 people. That's mainly because I want to get a big picture. I want to get a clearer picture of what retail traders, retail market analysts are thinking. So it's no good just following people you like. You just have to follow everyone in the space, everyone who really posts their ideas, no matter charts or things like comments, right? You can sense if the majority is bullish or if the majority is bearish. Usually, if prices go up and prices stay at a high point, people turn bullish. And if prices go down, and if the price kind of consolidates at a low level, people turn bearish. So that's kind of how things are. So right at this moment, I sense on Twitter that people are kind of feeling the uncertainty, but hope for bulls hasn't been lost because people believe that here we are going to form a higher low. So they'll think, oh, it's not too bad because we've pumped up once, we've dropped, and we didn't drop to an all-time low, so we pumped further up, and now we're dropping, and we're now not going to see a new low. We're just going to see it go down a bit more and then bounce and go all the way up to the moon. Don't be mistaken. That could happen, but it's very unlikely because this correction wave is most likely over and we're going to see price continuation downwards. But it is also why I think the price will drop to 37K, around 37, 38, and see a small bounce, just a small bounce to get everyone who believes that there's going to be a bottom like this or this form here, get them to believe their analysis and buy in. And once they buy in, prices can plummet even further. So what am I planning to do? I'm planning to buy back in around 23K. Actually, I'll buy in a range. So I won't just place one buy order. I would buy once price dips below 29K. I think I'll buy I'll buy 10% of my portfolio every day. So I'll use 10 days to fill my bags. So once prices drop below 29K, I may buy here, I may buy here, I may buy here, here. So I don't think we're going to dip and then we're going to go to the moon all in one go. It's more likely that we'll dip really hard, maybe to like 23K, and then we're gonna bounce around. So we're gonna bounce to maybe 29K, and then we're gonna dip back to 24K. We're gonna bounce around and probably regain 30K at a later date. So maybe sometime this summer or late summer, early autumn, which is September, could be September, could be October, where we start this big leg up to probably 53K. The purpose of this is, let's get rid of all of this drawing. The purpose of this, as a market psychological analyst, is right now, where do you think the price should dump to get the most people out of this market? In my opinion, it would be below these levels here. So this is why I think that in the midterm, we're going to see the price plummet to 33K and then range between 23 and 23 and 29K. Why range? Why not just like dip and then bounce all the way back up? Well, because that would be too easy on people. If you dump the price all the way down and just bounce it back up, it's just too easy. People who bought here, they will just hold on, right? They'll just make money. But that's not how markets work. The markets want to get people out when prices are low and make people buy back in when prices are high. So how to make people sell a low level? Well, you range bound the market. So the market will go sideways here, most likely. This way, a lot of people will lose hope, lose their conviction. Most people are convicted to buy at 25K. They would think that's a great level to buy at. But once they've bought in, will they hold? That's the main question. A lot of people will not hold because it goes range bound. The market goes sideways. It goes up and down between 23 and 29K for maybe, it could be from May to all the way to August, could be 2 or 3 months of sideways. And then we break up. And once we break up, people don't believe that it is a real breakout. But then how do we make people believe? We draw this trend line. And if they see the price break above this trend line, which let's change the color here. Sorry. Change the color to red. If people see the price go above this line here, they'll turn bullish for sure. Because most people look at this kind of simple pattern. They'll connect the dots to a line and they'll see, okay, I'll buy back in. I'll start buying back in once prices go above 33K. So I bet a lot of people will be buying all the way above 33K, which is fine because prices will go up a lot further, in my opinion. And I reckon most people will buy back in above 48K, in between 48K and 53K, because 50K is a big round number. It's a psychological level. Why? Because people are always talking about 100K, right? 50K is right at the middle. So if you break above 50K, you're closer to 100K than to zero. So that's really a psychological motivation for being above 50K. So if prices go above 50K, a lot of people will turn uber bullish. They'll ape into their NFTs. They'll buy their favorite altcoins. But then that's when the music stops, you know? That's when we're gonna consolidate, make people buy in more, and then we're gonna drop even further. So this is, it is possible that this bear market is gonna extend a couple years. I think it is possible for us to hit the absolute bottom of this pair market. Pair market would be fruity, but yeah, this bear market. So I think this bear market at the absolute bottom would be around 10K. That's my prediction. I mean, you can say what you like. I think many people in the chat on YouTube looking at this live stream may think, oh, Jimmy's just a market analyst. He's just a bear tard. Not a nice word, but I don't blame you, because obviously, if you've only tasted the fruits of this market, if you've only tasted 2020 onwards, everything has been going great. It's up only, right? You don't believe in a bear market. If you sold, you would buy back higher, and you would lose your Ethereum in terms of coins, right? If you sell at like 2K, you buy back in at 3K, you lose a bunch of coins. You don't lose any money, but you don't have as much Ethereum. So that kind of gets you in a fixed mindset of being bullish all the time. But actually, markets have market cycles for a reason, because too many people, too many scams are in this market right at this moment. Huobi is definitely one of the better exchanges because they don't list uber shit coins. I mean, there are some exchanges that I don't even know the names of, but actually a lot of them are dexes, like dex.guru. There are lots of these random meme coins, which are complete scams. It's just all a game about when to get out, right? And most NFTs now in the space are scams. People are always trying to recreate the next Bored Ape Yacht Club, the next ape, the next CryptoPunk, the next, what are the other ones? Yeah, you know what I mean. But they're actually making these scams to make people think, oh, we're going to make this next 20,000, 10,000 profile picture project, and where our floor price is going to increase to like 100 ETH, right? But that's not going to happen. Most of these projects are exactly like the 2017 scam ICOs. It's all the same. It's actually the same kind of concept. The project developers receive Ethereum, and they give you something in return, and that's it. They get the hard currency, Ethereum. Ethereum is gonna blow people's minds in the next 5 or 10 years. I guarantee you that. But in the short term, so many people are using it as a means to scam, just like in 2017, that it's saturated with scams. So once these scams start to run off with the funds, they'll definitely want to cash out their Ethereum into hard currency like US dollars. So by doing so, they're going to sell their Ethereum, and they're going to start selling once prices drop. So once prices start dropping, they're going to see, oh, my scammed funds are not worth 100 million anymore. They're worth 50 million. So to prevent them from losing more of their scammed funds, they're going to start selling their Ethereum. So this is one of the major points I'm getting at. It's regulatory risk, because in 2017, China banned ICOs. ICOs took a big downturn, but Bitcoin went up a lot. Maybe because Bitcoin was going to go up anyway. There's a ton of demand. And then later on, smaller projects went up a lot. But then later, these ICO projects, most of them went to zero. Most of them went to zero because they started cashing out as Ethereum dropped. And as Ethereum dropped further, they started cashing out more. So it's a cascade effect, pushing the price down, which results in a big drop. And so that's what we're looking for. A market cycle should always have these moves downwards. Have these moves downwards that get people really bearish, shake people out, and then things may turn bullish again. So it is possible that if we see a big bounce in the midterm, like sometime this year, it could be related to war. So maybe war in Ukraine stops. That could be a catalyzing event that could push global markets up. But then we could go into a recession and then global markets go down further. Then there's regulatory risk. Just today, this morning, I posted on my Twitter saying there could be regulatory risk in terms of NFTs, because we all know that China has banned crypto exchanges, crypto ICOs. An NFT mint is basically the same as an ICO, because you pay Ethereum and you get something in return that you could sell or you could keep or you can do anything with. So the people receiving the Ethereum are it's illegal. It's illegal to do that in China as of now. But the regulators have just woken up to this, and it's pretty much the exact replica of the 2017 ICO scams. So I think we'll see a lot of regulatory risk coming in this year, possibly banning NFT mints, maybe saying you cannot mint NFTs with Ethereum. You can only do it on Tencent or something. Like digital collections are okay, but not on the Ethereum blockchain. It's possible that people do that. Not people, the regulators. Regulators are people too, don't get me wrong. So it is possible we'll have a lot of regulatory risk. And once prices of the major coins drop down a lot, I think we'll see some bouncing around, possibly for a whole year, to really shake retail traders out before we see a massive upturn again. So this is why I've made this chart. I've made this chart just to end our live stream today. This chart, I call it the bearish banana chart because it looks like an inverted banana. And it is possible for us to, in the short term, drop to around 23K, bounce around 23K for a couple months. And then we're going to go to 50K. So that's the big move you guys should be watching out for this year. A big move from around 25K to 50K. That's just BTC. Other coins may go up further. I'm looking at quite a few projects right now. You could follow me on Twitter. Obviously smash that follow button. And then join my Telegram page here, Telegram group. We talk about markets every day. So here we see it's possible for the price to drop to 20K, pump back to 50K, and maybe later this year or sometime next year, drop all the way down to 10K, around 10K. So I think 10K would be a great place to really load up on BTC. and Ethereum. Why not load up on other coins? Well, according to my my kind of experience in this market, a lot of coins that were really hot in the previous bull market generally don't do very well in the next bull market. So it is better to buy in things that you'll know will be around, like BTC and Ethereum. Ethereum, people are looking at this June as a point, as a time point where we could be upgrading to Ethereum 2.0. But I don't think that will happen. I have friends in prominent Ethereum projects that have talked to Vitalik. And even Vitalik, as of now, isn't so certain that Ethereum is going to be up and running. This Ethereum 2.0 isn't going to be up and running anytime soon. I think it's possible next year or even 2024, it could be upgraded, where the beacon chain and the main chain are going to merge. So that's the merge we're looking forward to. But I don't think that will happen this year. So watch out for June. I think June, we may see the price be at a low point already, but we're going to see it dump further. Why? Further a bit more. Why? Because people are, as of now, they're expecting Ethereum to upgrade, right? And if Ethereum doesn't upgrade, that's a big kind of, that's not very bullish for Ethereum in the short term, because lots of people are expecting. So if it doesn't meet their expectations, they're going to sell. So that's why we should look out for June. I think in the next two or 3 months, the markets aren't going to be so great, but I think we should start buying. And then probably in August or September, markets will take an upturn. And that's the market we're looking forward to. Lots of coins, I think, will go 5x. Some of them will go 10x, and then we'll sell. And then we're going to wait for the big dump. So the big dump should go to 10K, and we're going to rebuy. And within the next 2 years, do a bit of trading, rebuy, fill our bags, and look for the best projects ever. So I'm going to talk just for 5 more minutes about one of the trades I made this year, which is not kind of a really good trade, but later I realized it wasn't a great trade, because in 2017 I bought Bitcoin at $12, and I sold the majority of it above $500, a lot of it above $1,000, and then I got in Neo, which went 90x, and then in 2021, I got in this new coin called Solana. So lots of people know Solana now, but I got in when it was $1.6. So in our group, we bought in at $1.6. We held all the way. We didn't sell a single Solana all the way to up to $50, $60. And I sold most of my Solana, which is 30. I got 35,000 Solana back down here, and I sold the majority of my Solana at $30. So I did a tasty 20x, but I thought I was smart. I thought I was smart. I thought I sold the top because we're seeing this massive triangle, and I think we're going to drop further, but it didn't, and it just went up. It went up. And it went up so consistently and so fast that I couldn't react to it. I couldn't buy. I had to wait for a pullback, but there was no pullback. And it went from like $30 all the way to like $240. Oh my God. I mean, I could have bought a castle with the funds, with those funds. But unfortunately, luck wasn't, not just luck. Maybe I know too much now. Maybe I want to trade too much, but that's definitely not a good trade. I got out way too early. Although I did make 20x on this trade, at least 20x, but I got out way too early. So I've devised a strategy. In the future, if I find a project I really, really like, I'm going to hold on to it for at least 1.5 years without touching it. So if I bought in here and I sold here, that's exactly 1 year. So it would be great if I bought in and I put it in my wallet and I set a timer for 1 year and I just sell after 1 year. I think that would be a very good trade. But if you sell any time like 3 months after you bought, you're going to miss out on the big move. So because some of these coins, so-called Ethereum killers, have a very hot market cycle, like AVAX Avalanche, right? Bought in at 18, sold at like 70, but then it went up to like 170. So, well, you can't have everything, right? But I think in the next bull market, one of the things I'm going to do is once I identify something really good, I'm going to hold on to it for at least 1 year, no matter if price. Oh, okay. Right. I think we have some questions here. Let's see. Some questions from the audience. Privileged to be part of these live events. Let's see what are the questions. Bull markets were very soon. Yeah, war subside, then the bull market for sure. Well, yeah, sure. That's what I just said back there. If the war stops, I think we'll see a big pump. Congrats on getting it, sir. Technology. What's the brand of the beer? It's a Korean brand. Sorry. Premium Citra Ale. Kabrew. Kabreu. That's the brand of the beer. Let's see some other. Oh, okay, Ape and GMT. So this is a good question. Let's have a look at Ape. Ape is a coin that was airdropped to Ape holders, and I drew this chart. Sorry to give you a premature heart attack, but I think we're going to go down a lot. So I don't think it is a wise choice to hold on to Ape for that long, because as of now, it has no use cases. So there's nothing to maintain the price at this price level. Before it went live, I thought Ape would be around $3 or $4, judging by the the market value. But it went all the way up to 14. I think it's overpriced. I think in this cycle, maybe in April or May, we'll see it dip down to $3 or $4. So I don't think Ape is a good buy. GMT, on the other hand, I am bullish long term. Why? Because I play the game and I realize how good of a game it is. They're partnered with ASICS, the running shoe brand. And I think as of now, the wave from $0.1 all the way to $3 is a purely speculative wave. So there's no substance behind it. It's just pump, pump, pump. People buy in GMT because they see like the game is doing well. But the game has nothing to do with GMT. The game uses GST. It's going to use GMT soon, but I think before that happens, we're going to see a big correction. So GMT, it's possible that we'll see GMT below $1 sometime in April or May. I think buying it between 0.5 and $1 is a very good price. And then we'll see a real growth wave. Like with Axie Infinity, we also went from 0.1 all the way to 9, and then we dropped down a lot before going from like $3 or $4 all the way to 150. So I think the next wave will be the major wave, which will take us from below $1 all the way to maybe $20 or $30. So I think GMT is something to look out for. I'm not going to look at Osmosis. I've never even heard of that. Sorry, mate. Algorand, learn and earn. Learning English, I don't think that as a game is as good as Steppen, because it is a lot less difficult to cheat in that kind of game. So with Axie Infinity, you see people with like 100 phones playing it, right? And it's possible to farm. But with Steppen, you can't carry like 5 phones and run because your accounts will get banned. And you have to run, or walk. So it's kind of mining in that way. It's a lot safer as a long-term bet in terms of GameFi. Is it a Ponzi? Everything's a Ponzi. Countries are Ponzi's. If the GDP growth slows down, the people in the country feel very bad. They feel it. If a company stops growing, they fire their employees. So everything's a Ponzi. Everything needs money pouring in to fuel growth, to fuel demand, to grow. So like this is how civilization works, right? People can't take downturns. People want things to grow constantly. So everything's a Ponzi. But I think Steppen will grow long term. Yes, my guess is that due to the inflation data in the world, Bitcoin will be the investment stop of people and fund companies. But the Fed rate hike will affect it in the short term. Yes, I fully agree with you. I believe Bitcoin is a great investment long term, but I think Ethereum is an even better investment after the merge, because it will be deflationary, and it will be the most profitable company ever, Ethereum. But short term, a lot of uncertainty, a lot of regulatory risk in terms of NFTs. So I think we should watch out short term. Don't get me wrong, I'm uber bullish Bitcoin and Ethereum long term, but short term, it is a risky market. So I think we'll wrap up for today. And I hope you liked my live stream. I hope to do this more often with Huobi Live. Anyway, stay safe in the markets. Hope you do well. And see you next episode. I'll be on with my friend Andrea. See you next time. Bye-bye.